Hello everyone, welcome to the Ichimoku.co-and-forex-trading.tv with a daily analysis for the Aussie dollar US dollar FX for the trading day ending Wednesday, February 26th. Well, a fairly large black body candle today, and the candle we're analysing is this second last candle on the chart. That final candle is a new trading session and currently developing, so we can't fully analyse that, although there is some significant price action taking place in that candle. We will have a look at that. But with the candle that has finalised trading, we've seen the sellers find some new downside momentum, where 2 candles ago we saw the buyers coming into the market to find resistance at this large zone of resistance, and then a very indecisive spinning top type candle with a small black body, and we've seen continuation of that downside momentum in net terms with the sellers for today's trading and taking out the important 90-cent round number level of previous support, and also closing down below the Tenkan-sen, the green line here, giving us a bearish market in the short-term time frame. The sellers here have also taken control of the market by closing down below the midpoint level, but only a moderate form of control. They haven't closed down at the low, and the small shadow on the bottom of the body of the candle highlights upside price rejection from the important 89.30 level, and that is a level that has been tested on multiple occasions in the recent past and held as very, very solid support. Now, as we see this current candle that is developing, we've seen the market test down below that 89.30 level again, being rejected from there. So it does tell us that that is a crucial level to this market if we are going to see lower prices. Also, we've seen the market rejected from the bottom of the cloud in a significant manner. Now, in terms of the Fibonacci extension, and here we're examining the relationship of this current first time frame downtrend that the market's into the previous time the market was trending down, and here we see the market once again interacting with the 100% level for the third consecutive occasion, and with this current candle failing to close down below there as this candle's developing, and that may not be the case when the market closes, but we are seeing rejection from that area, and it really does highlight how strong the amount of support is around this area, and suggesting that if the buyers come into this market, there is potential for them to trade this market back to the upside and potentially change the trend, although we won't see that with today's candle, where we already have this current candle establishing a downtrend. Now, just something to be aware of that we should be watching here, and we have something of a little head and shoulders pattern that may have formed in this market. Not complete yet, and just remembering, however, that head and shoulders patterns tend to be major reversals, and that means at the end of a significant trend. Now, I wouldn't call this trending action from down around this level, around the roughly about the 86 level up to about 90 cents, major trending price action, but the sentiment here is the same. We have a trend in place, we have congestion, and then we're looking for a potential reversal breakout to the downside. So just looking at the shape of this potential head and shoulders pattern, trend in place, which is important. Okay, so we always need to have a trend in place prior to the congestion area. So here's the congestion area. Here we have the left shoulder, the head in the middle, and the right shoulder here. Somewhat complex, not fitting perfectly with the copybook head and shoulders patterns, but we've drawn the barrier, the neckline down through here between the two shoulders, and what we're looking for completion of the pattern would be a close down below that neckline, not just a projection below it. We want to close down below there. That would complete the pattern. That would give us a target, the width of the head to the neckline, or the depth of the head to the neckline projected down from the breakout. And if we get the breakout today, we will have a target down around 88. Now, how realistic is that target? Not too sure, because we have very solid support down below. We have, firstly, the area at the bottom of the cloud for the market to trade through to achieve that target, and that's not going to be easy. The sellers will need to find some very solid downside momentum, and on this close down below the neckline, we'd like to see a bearish close down below there to have greater confidence. Also, we have the Kijun-sen trading just below the cloud, so we have even more solid support down below there, as well as the support based on previous peaks and troughs. So not an easy target for this market to achieve if we do see that occur. But look, just looking at a pattern that may be forming from a longer term perspective, as well as the a potential inverse head and shoulders pattern, and it's a complex inverse head and shoulders pattern where we don't have we have these peaks and troughs within these higher time frame peaks and troughs here. But here we have the prior downtrend in place, trending down from above the 97-cent level, around the 98-cent level or so, and very well defined efficient downtrending action, and then this large volatile sideways action with a left shoulder here, the head, and potential for a right shoulder to form. So what we're looking for here is for the market to potentially break out and close up above this neckline through here. Now this might not eventuate, but it is something that does have some potential to eventuate, and what we'd probably need to see here is for the market to break out through the top of the cloud. That would give us a bullish market in the longer term time frame, and perhaps add some probability, a greater probability to potential inverse head and shoulders pattern. Now this is a very wide pattern, and also the distance from the neckline to the bottom of the head here is quite large, and would give us a potential target up around the 95-cent level without any of the Ichimoku indicators acting as resistance for the market at the moment. So just something that we need to be aware of in a longer term perspective. Now in terms of Ichimoku, obviously still a neutral market in big picture terms, with the market trading within the cloud, so no clear direction in this market, and what we're waiting for is resolution of this market out of this congestion area that we've been trading in with this little mini head and shoulders type pattern. The market is bullish still in the medium term time frame by trading above the Kijun-sen, but that's flat, and price action now is being attracted back towards there, and perhaps add some weight to a potential breakout down below the bottom of the cloud. Excuse me, and below the important 89.30 level of support. Excuse me. And also a bearish market in the short-term time frame, with the market trading down below the Tenkan-sen, the green line here, which isn't too easy to see. We also have potential support at the resistance at the Tenkan-sen, coinciding with that 90-cent level. So if the market does rally, there is a confluence of resistance around that area. But also if the market does rally higher than that, then we also have that large zone of resistance in play. But really a market where we're waiting for resolution out of the mixed signals that we're getting from the Ichimoku indicators at the moment, and this congestion area that we've seen form in a little mini head and shoulders pattern may resolve itself with a breakout to the downside, or we could eventually see a breakout to the upside and resolution of that larger pattern that may be forming.